What's going on, everyone? It's been a while since I made a video because I've been in self-isolation. Not because I have to, but because I have no life. I've been trading the US markets during the nighttime and the Australian markets during the day. So really, I've just been 12 hours a day just looking at the markets. And as you can see, it's all quite volatile, all quite exciting. So that's pretty much what I've been doing the past couple of weeks, is just trading this monstrosity of a drop. What I'll be looking at today is QANTAS. We can see Qantas at one point hit $1 back in 2013 and shot all the way up to $7.50 quite recently. And we're looking at, what's that, December last year, January this year. And it's taken a meteoric plummet because of coronavirus, obviously. So we're going to have a look at the impact and the financial situation of Qantas and what to expect, what price we could potentially get into, and have a look at what their revenues are, what they look like in the past, what they might look like in the future, what's a potential good entry point, and of course, the horrendous sentiment behind the stock at the moment. Now, just today, excuse me. Now, just today, there was an announcement that they are cutting 90% of international travel up until I think it was May 2020, and domestic travel as well by 60%. So let's have a look at what that'll look like based on their most recent financial year data. So we can see on their revenues, they've had $17.9 billion, about $18 billion in revenue. That's from their two primary sources, which is international and domestic travel plus freight revenue. And yeah, so it ends up their PBT, which is, I haven't seen PBT before, but it stands for profit before tax. It's kind of like NPAT, net profit after tax, but before tax. It's a decent measure of revenue, of profit, sorry. So it's just a little bit different. Now, 1.2 billion in profit, that's for the whole financial year. And these guys are trading at $11.7 billion at $7.50. Now, they're currently trading at $4.5 billion at $2.89, $2.86 was the last price. So they've taken a huge hit. That's a 61% drop in share price. And I have a feeling there's going to be a lot more to come, despite the fact that the market might bounce. We can see here, even on the Fibonacci, we got the 38.2% here. It held on for a day. That's it, really. I'm going to have to just hang up on you. Sorry, bud. So yeah, 38.2%, barely held on for a day, and it just plummeted. It really did just tank right through every single Fibonacci level. And I really do have a feeling this 78.6 might be a bouncing point. The sentiment is horrific. I mean, we've just dropped 90% of international revenues. And from memory, it was 7 billion was international revenue. And domestic was like 6 billion, so they were quite close, almost 50-50, 60-40. So let's have a look at what the numbers look like. If we assume coronavirus in Australia is going to hit its peak in July. Not its peak, but it'll hit a peak and then it'll dwindle, it'll drop down. If we take Wuhan as an example, we can see it peaked over 3 months and it dropped quite significantly thereafter. Now, we're sitting at 300 people that are infected at the moment. In Australia, it's going to soar. There's going to be a peak at some point in the next month or two. And then it's going to dwindle down as we introduce more isolation methods. And we can expect this to go on for quite some time. So I don't think May is going to be the end of this reduction in flights. I think it's going to be a lot longer than that. Let's assume for the year they do a 90% reduction. This is kind of an extreme example. So if we have, and I assume freight revenue would also be impacted to some extent. It's not even $1 billion of their revenue, but it's worth considering. So let's take their 18 billion in revenue, and their expenditures will obviously decrease as we decrease our revenue as well. But if we take $17 billion, sorry, let's take $18 billion. And no, sorry, 7.5 billion was the revenues for international times 0.9. So they're going to lose $6.7 billion. They're going to end up with 750 million in international travel. And if they had about 6, let's see, 7, so yeah, about 6. Now we can go 7 as well for domestic. So 7 billion, and what was that? That was a 6% reduction. So we're going to end up with 2.8. 2.8 and 0.75. we're going to expect 3.5 billion in revenue this year. That's horrible. That's shocking. And if we factor in, so let me just take a percentage of that. So we have make that $18 billion. The 3.55 divided by 18 billion, we have a reduction of 80%. 80% of revenue just down the toilet. 80% is massive because a lot of that is going to come through expenditures. Like, it's not going to be $18 billion loss because they're still going to pull in 3.5 billion revenue, and then of course they're probably going to have a reduction in expenditure. That reduction, let's say 2/3, because it's going to be less staff. Sorry, a 1/3 reduction, because obviously there's fuel, depreciation, amortization. There's operating expenses as well. Operating expenses, let's say instead of 10 billion, they're operating at what's something reasonable, because obviously 90 and 60% reduction in their flights. So if we take that, so 90, so 30, okay. Let me just do some maths in my head. So 75% reduction of 10.7 billion. So 10.7 times 0.75, they'll probably spend $8 billion. No, sorry, $2 billion in operating expenses. Fuel will be reduced quite heavily. And even then, we're still operating at a profit of negative $5 billion, perhaps, at the end of it, negative $4 billion, roughly. But that's going to be a one-off hit. So if we take a 80% reduction in the top-end market cap, and what was it? That was 11.5. That's about 2.3 billion market cap. So what are we sitting at the moment? We're sitting at 4.5 plus 4.5. So we need a 2.2 billion in reduction. So half the price, half of today's current price might be where we can see Qantas heading to. So 2.86 times about 0.5. So we can see about $1.43. If we were to maintain revenues, the ratio between revenue and market price, the share price, then we can expect $1.43 to be about the price that we're looking for. But the market isn't that generous. Sentiment is a bitch. So sentiment will drive this down a hell of a lot. So keep in mind that the current position of Qantas isn't that bad. It's the long-term position that's going to be horrific. Now, the market is factoring in this long-term view. And this long-term view is that it might hit revenues that are really poor. Let's say an 80% reduction in revenues for the year. And that would be $1.43. Now, will the market go down to $1.43 next week? I don't know, because that would be factoring in the future of Qantas, right? Today's share price shouldn't be valued at $1.43. The future of Qantas would be about $1.43 around May to August. I mean, that's a big gap, but around that range, that's when it should be $1.43. So we can safely assume, in this market, because of the massive sell-off so quickly, keep in mind these guys have cash in the bank as well. So I haven't actually looked at cash backing and how much they had. But so, okay, here we go. Cash at the end of the year, $2 billion. So if we drop to $1.43, that would be about half of the market price. Yeah, $2.4 billion. That'd be cash backing. So we got to factor in the reality that, sure, the price will take a hit, but we're not going to take a hit to cash backing. That is absurd. No matter how bad the company outlook is, that's cash backing. And the company shouldn't drop to that position. But again, sentiment is a bitch. So I would say it's reasonable to assume this horizontal level here. Let me just change that color. This horizontal target, $2.59, and this horizontal target here at $2.39 would both be good and valid entry points for a bouncing target. Now, what I'd be looking at, because this is unbelievably oversold, right? We got to look at this and say this is oversold. The market's correct in assuming the future value of the company is going to nosedive to this point. But it's not worth this much money at the moment. It's worth more. Qantas is worth more, undeniably worth more, based on cash backing and the passengers that they're still flying out. So again, market's a bitch when it comes to sentiment. So fair value doesn't necessarily mean that's where the share price is going to go. So having a look at the technical analysis, 78.6 is a reasonable bouncing target. In the future, we can see maybe $1.50 or $1.43. That'd be a reasonable entry point. And we can see where Qantas can go once coronavirus is gone. We know that this is a company that's worth roughly $7.5 billion in market cap, because that's where it was before. And they had the financials. They showed us the financials here to demonstrate that they pulled in $18 billion in revenues, had $11.5 billion market cap, and they're running at margins of about 12%. That's just roughly 12%. So this is a company that can get back on its feet in the future. Coronavirus won't last forever. I mean, if we enter Qantas at around $1.43, if it gets to that price point, not only will we be getting a fairly decent value for the company, you'll be getting cash backing for the company at roughly that price tag. But you know the potential of Qantas in the future. This is going to be an absolute dream purchase in the future. Like, just about any blue chip stock is going to be a dream purchase, but there are particular sectors that just are getting destroyed. Tourism is getting destroyed. Can a company like Webjet come back? Probably. A company like Qantas? Absolutely. Flying is an essential part of life. Domestic and international travel is just a reality now. It won't just disappear because of a virus. It may be interrupted in the short term, but this is where the buying opportunity comes in and the investing opportunity comes into play. Looking at perhaps a 3 to 5 year hold, looking at an absolute bare minimum of 100% gain once this bounces back. Now, bouncing back would be almost an inevitability. I don't say a guarantee because there is the off chance that Qantas can just delist and disappear as a company. I mean, there's always that chance. It's the stock market. Its sentiment's a bitch, and we don't know the future of coronavirus. We don't know the future of other countries. We don't know what the reinfection rates look like. We don't know any of these things. These are just assumptions that we need to make as investors and be reasonable about the decisions that we make. Now, I think it's reasonable at $2.39 that there will be a bounce, roughly around that price. I think it's reasonable based on current existing cash backing. I think it's reasonable based on the fact that they're still flying in the air. I think it's reasonable because they're going to be reducing operating costs and fuel costs, which are the main factors in their expenditures. So I think that's a very valid place to put an entry and an extremely tight stop loss. What I'd be looking at if, let's say, you had a $20,000 position, I'd be looking at $10,000 here. $5,000 here, $15,000 here. Maybe a 30% and 70% of your trading capital, whatever you want to put into Qantas or any other stock. That'd be a reasonable entry point, is these two targets here. Put a little bit in, stack more on top, scale in, and then set a stop loss at around I'd give it time. I'd give it some space to whip around because the market volatility. I'd say around $2.20 would be a stop loss. There's no point holding onto this stock if it drops any further. There is no technical analysis except maybe this horizontal here. It's a very weak horizontal as a bouncing point. The price is just going to tank. Once this structure is gone, once this entire pricing structure is gone, and by that I mean it drops below 78.6, there is little room for it to really bounce anywhere else. Now, you might be wondering, well, why did you say $1.43? Well, that's the reasonable fair value in the future. That's assuming cash backing is gone, so there's no more cash. One can assume that they'll be operating at a loss and that cash backing will be gone in the towards the end of the year, probably end of Q3. So if that happens, then fair value would be around $1.43. And that'll be a great entry point, purely based on fundamentals and financials and our estimates for today. We'll have to revisit. This is just preliminary targets, right? This isn't an absolute, in 6 months' time, I'm definitely buying $1.43. This is just preliminary analysis. This is what I'm seeing now and planning for in the future. This isn't, I'm not locking down my price right now. This is purely analysis and being aware of what can happen in the future. And we're really just pricing in a target based on what we know from the last financial year, their profitability, what we know today, which is the reduction of their flights and revenues, and what that impact can look like in the future. It's all clear as day on paper. We've got the financial numbers, we've got the estimates and targets. Now it's a matter of a waiting game and seeing if it gets there. In the short, immediate term, $2.39 and $2.60 are perfect bouncing targets. Likely, what I'd be estimating, what I'd be guessing at this point in time would be a move that looks like this. A bounce perhaps to 239, a very small bounce, coming back, retesting the 78.6, and then perhaps hitting this $3.50 target, which would be the 61.8%. That would be the trade I'm looking to make with a stop loss at, $2.20. I'd have something very tight. It'd have to be tight. It wouldn't make sense to scale in on a position on a stock that will technically fail. If it technically fails, why would you still hold it? If it continues to drop through this point, there is little room for it to recover. There's maybe a horizontal here that it might bounce off. That's about it. So that's my plan and expectation for QANTAS. This is something I'll have to update in the future, particularly in about 6 months' time. I do expect this price to absolutely tank, so keep in mind that this is a short-term to medium-term trade. This is in the very near future. Long-term investment, absolutely 100% within this $1.50 to $1.40 range, if it gets there. I'll make a video on how to scale in and techniques on scaling in. So scaling in is an example here that I put in of a small entry here, and then a much larger entry here, and then a very tight stop loss. Scaling in is not the same as adding to a losing position because you're doing it with a plan, right? You're planning what to do with your position, and it has to make sense from a technical perspective as well as a fundamental perspective. So this is not simply adding money to a losing position, but it's planning ahead in case it bounces off this point here and shoots up. You'll at least have some sort of position. Otherwise, you'll want it to go down. You'll want it to go down, so you scale in at this point and then hope for the bounce. And if it doesn't, you've got a tight stop loss, and the reality is you can't always beat the market. So hope you guys enjoyed this video. As always, this is probably the only ASX content on YouTube. So if you enjoy what you see, please join my Twitter page at demoniacoasx, or if you want to buy me a cup of coffee and say thanks, feel free. Patreon.com/ASX tutorials. Thanks, guys.